Welcome to Should You Buy It, an email edition. I'm Aaron Task here with David Peltier. He writes our weekly Should You Buy It column, as well as the Dividend Stock Advisor and Value Investor newsletter. Dave, it's great to see you.
Great to be back.
Great to have you back for this bonus edition. We did this yesterday. Here we are back again today because we had an overflow of emails, including this one from Andrew in Detroit. Would you please comment about Corning executives exercising options of late? And there has been a lot of selling by insiders at Corning in recent months. What are your thoughts on Corning?
The stock's up 30%. I think it's their right to sell it, but it could be a red flag, the sign of something slowing down. But you look at the Ciena numbers today, and it kind of confirms, at least on the fiber side, that Corning's still probably doing pretty well.
Right.
I know it's a name also, sorry, that Kramer's gotten into recently.
I was going to say that. He said it's back from the dead, and actually it's a story that has three legs: fiber optics, because it orders from Verizon, the liquid crystal display terminals, and a clean diesel engine filter business, which you really don't hear about when people talk about Corning.
No, and it might not be a huge part of their numbers, but it's a wild card that could produce an earnings upside. And if that becomes a hot part of the market, it could be an extra 5 points for the stock.
Okay, so you like Corning here, I take it?
I do. Hard to go against Jim on this one. I think he knows what he's talking about. And the insider selling, I think it's just some profit taking.
Okay. Another email from Brian who writes, Loews has had a nice ride. I love the company. I love the Carolina Group. I love Diamond Offshore. I am wondering what's going on with Loews. Do you see a split coming soon, perhaps a cool down? And I should note we're talking about Loews Corp, not Loews, the home improvement retailer. And I'm stumbling here. Loews Corp, which you wrote positively about in early May for the Should You Buy It column. You still like it here?
I do. The stock's actually up 4 points, which that's almost 10% for that stock. And that was really all I was looking for the year. But I do like it because of the strength of the underlying businesses. You've got an insurance company, a tobacco company, you've got an oil company. They're all spinning off a lot of cash flow. They're all doing very well right now. Plus, the LTR, the parent company Loews, is also buying back a lot of stock. And that's also supporting the shares. And so I'm sort of bumping up my unofficial price target.
Well, I was going to ask you about it. So you're a value guy, and you know, in your mind, you're looking for 10% appreciation. You get it in a month. You don't say, you know what, maybe I should take my money and run here.
I thought back then that Loews was undervalued compared to the overall market. I think the latest move in the stock is because of a big updraft in the overall market. So I think the stock still looks relatively undervalued. And so I'd say instead of, the high 50s are now possible instead of just the low to mid 50s.
Okay, so you're sticking with Loews as well.
Yes.
All right, and finally we have an email from Mark. This is a kind of a macro. I've been surprised the market has rallied with higher gas prices and lower earnings growth. If the market wants a rate cut, don't they need lower inflation? So this, of course, ties into yesterday's FOMC minutes, the market rallying, even though the Fed, it didn't seem to me they said they're going to cut rates anytime soon. Today we got the weaker GDP report. Where do you come down on all this?
I have to agree with you. If you're looking at just the economic data out there, I think the market is overextended. But as we've talked about before, it's not the only thing that it's not the only thing
that matters, right?
That investors are thinking about. There's so much liquidity out there right now. Whether you're borrowing money from Japan, whether it's just the billions upon billions that the private equity guys have that they need to put to work. There's so much money out there, institutional money, not necessarily the retail. We still see that the retail investors aren't really jumping in just yet. But there's so much institutional money out there that's just waiting to be spent that's what's keeping the market up.
Right, and I would also say, we've had 3 straight months of strong durable goods numbers. The most recent match of ISM numbers were stronger than expected, and maybe the economy, maybe the first quarter is going to prove to be the trough, and the economy is going to pick up steam in the second half of the year.
Tough to tell. I'm still on the more conservative side on that front, and again, you're seeing it in the industrial side, and you're seeing it on the institutional side, in the investors. You're not seeing it so much in the consumer.
Well, this might be the long-awaited passing of the baton from the consumer to business, which will be a good thing.
I'm all for it. I'm all for it.
All right, David, thanks very much.
Thank you.
David and I are going to take your emails at least once a week. At this time, our emails are on the screen. Send in your questions and comments for the next segment of Should You Buy It? I'm Aaron Task. Stay tuned for more of TheStreet.com TV.